Welcome to Bloomberg Markets. I'm Shonali Bassick. Earnings, elections are all top of mind. We're 1 week away from the big U.S. election, plus a parade of earnings. We had a bunch this morning, and of course, big tech starting after market today, too. Let's get a check on these markets and see what the mood looks like under the surface, because you have the S&P 500 wavering into the morning and now firmly up about 1/10, almost 0.2%. NASDAQ 100 has been holding on to gains throughout the day at 0.6%. The 10-year yield, every time I look at it, it's pretty stunning, actually. It's at 432, and this drift higher in yields has been quite stunning. We had some conflicting economic data this morning when you looked at JOLTS as well as consumer confidence, with consumer confidence the strongest it's been in years. Crude, though, significant declines over the past couple of days, well under 70, now at 67, but only down about 0.4, about 0.5% today. Some midday movers on the equity side here. We're going to bring in Bloomberg's Jess Menton for that. Jess.
Well, Shonali, you were just bringing up how the election is just a week away, but with 7 days to go, looking over at what's happening with DJT, obviously Trump media shares rising about 13%, and actually got halted again this morning. That was at least the 5th time this month alone that it's been halted. So obviously a lot of volatility there. Looking at the poly market kind of betting here as far as what this could shape up for the election with just a week to go here. But of course, moving over and looking at some of the bigger equity movers of the day, have to point out what's happening in the auto space when it comes to Ford. So looking at its stock down almost 9% in the afternoon. Obviously, if it holds that loss into the closing bell, still one of its biggest drops so far this year here. But a lot of this had to do, when you're looking at the earnings report, had to do with a lot of the cost cuttings, especially with warranties. And when you compare that to a lot of its competitors, I mean, just last week we had GM actually lift its profit outlook for the year for the 3rd time. So really, when you juxtapose it against its competitors, struggling here too. But looking underneath the hood here for some more individual movers, though, looking kind of the retail space as well as the shoe space. If you look at VF Corp, actually the owner of Vans, right now up over 20%. So on pace for one of its best potential days ever here, if it can hold those gains through the close. Obviously, some of the margin pain, not quite as painful so far for this company, but McDonald's, obviously those international issues weighing on the stock, but just down about 0.1%. Keurig Dr. Pepper had a different share sale here, down about 2.5%. And of course, PayPal Holdings down about 4%, even though its 3rd quarter earnings beat expectations. Unfortunately, that revenue outlook for the 4th quarter didn't beat those expectations for shareholders and sell-side analysts, guys.
Jess, we thank you so very much for your time. Interesting look under the hood here, because we do indeed have 8 of the 11 major industry groups lower on the day. So don't just look at the index over there. We're going to dive a little more under the hood now with Bloomberg Technology co-anchor Caroline Hyde taking a look at some of the earnings. And I think this says a lot about the mood of the market to look at the financial technology companies and just how PayPal did and where revenue fell relative to expectations.
Yeah, they're saying and guiding towards low-digit growth. Now, the market wanted to see about 5% in terms of a forecast for revenue growth, and maybe the low digit comes in below that. I think most of all, investors are trying to stomach what has been quite a run-up in the shares. PayPal is having its best year since 2020. We're up more than 30% over the course of these last 9-10 months, let's call it. So maybe we're just going to sell the news, particularly as this is a company that continues to guide that it will be profitable growth. We're not going to have revenue at all expense anymore. They want to focus on building these partnerships. For example, the deal with Amazon, they want to raking the margin transaction, and they got that. Transaction margin did blow past expectations, so the profits are there. It's just about guiding the market that, look, revenue is going to be contained as we focus on that sort of profit.
I think that contained revenue outlook is really interesting here, because to the point you've been making about the run-up, how high is the bar for these companies? If it was high for big tech, these are kind of tech adjacent, aren't they?
Exactly, and I think for many it's also about the questioning of where the consumer is going to be, particularly as we still question what is happening in terms of the electoral outcome. It's interesting, we just had Anthony Noto, I know someone you know well, who's the CEO of SoFi. Very similar tactics and in many ways guidance for the market, because they're seeing from Anthony Noto a pullback in terms of a share price that he says is down to the fact that his shares are up 40% in the last trading month. So people have really been buying into this consumer outlook, the fact that interest rates are coming down. He says the environment's never looked so good for his fintech. And instead, though, he is trying to say, look, this is a business that, once again, maybe the revenue isn't going to blow past your expectations, but this is going to be growth that you can rely on going forward.
I find this a bit confusing, because you have PayPal up almost 30% for the year, and even if you saw that big jump in the last month for SoFi, it hasn't been that great of a year. what a crazy thing, isn't it? Because he has increased his guidance over and over again.
Yes, record revenue after record revenue, record quarter after record quarter. But he's desperately trying to reorientate the business here, isn't he? He's trying to say, look, I'm not just a one-stop shop for your loans. I'm also going to be diversifying. It's about the financial part of the business, the technology part of the business. And actually, he's driving up services revenue there in particular. But with that diversification comes a reorientating and re-understanding of the business.
You know, really quickly before I let you go, because I know you cover Amex very closely as well, and we have Visa, MasterCard, other big card companies this week. What do we know right now about how all of these companies are doing in the face of investor worries about consumers?
I think, well, Anthony Noto just said it, he doesn't have many worries about the consumer. The consumer credit quality looks good. Amex did see a little bit more of a write-off than it had previously been expected, perhaps, by the market, but this is a company that continues to deliver in terms of its own record profitability and record revenue. So for many, I think the consumer just proves resilient in the face of what is going to be a lowering interest rate environment.
We thank you so much, Caroline. Of course, Visa reporting after the market today, and the stock has been up about 9% this year. Now, moving elsewhere in the financial industry, D.R. Horton shares fell the most in more than 4 years after reporting disappointing fourth quarter results and a bearish outlook on home buying. CEO Paul Romanowski saying this morning, quote, that we are seeing our buyers sit on the sidelines, sit on the fence, a little less motivated today than they were in prior quarters. For more on this, we are joined by Prashant Gopal, who covers real estate markets for Bloomberg. And it's just incredible. We should also say that even after the quarter ended, Prashant, you have seen a rise in mortgage rates. You have actually seen 4 straight weeks of rises, increases in mortgage rates. So what does that mean for the outlook for new home buyers and the builders behind them?
Well, you know, I think it's the volatility in part that really is the story here. I mean, the rates have risen pretty quickly, and you know they were also declining before. So you go from decline to a significant increase that scares some buyers away.
So how long does that last for ultimately? When you can think about how clogged the pipelines are here, what are the ripple effects?
Well, you know, so D.R. Horton said something pretty interesting today. They were not. Someone asked them what rate they'd need before, you know, it would spark sales, and they said it's not about the specific rate; it's about stability. People now, you know, it seemed like in the quarter, a lot of people weren't buying because they were expecting, with the Fed having started their rate cutting campaign, that rates would be lower in the future. So people have been sort of holding back on purchasing. People may still believe that rates are going to come down at some point. So what's the urgency to buy right now?
Pricing, no? I mean, at the end of the day, we're all in New York City over here, and you see the price of housing outside of the city, and it is just exorbitant. And at the end of the day, do people not worry it could get worse from there?
Well, yeah, because prices could keep going up, right? That's the risk, right? So you could maybe you're thinking that if you buy today, you might be avoiding some of the maybe you'd be locking in a price, right? And it's better to buy now than later. But there's so much uncertainty. I mean, layer on the election, and a lot of people are just staying away.
Well, to that end, I'm glad you brought up the election, because if you're in the housing market and you're constructing and selling homes like D.R. Horton is, and Kamala Harris is on the ticket and promising to add an extra supply of 3 million homes, someone's got to build those homes. How much is that even in the price, or should it even be in the price, given the uncertainties around A, the election, and B, her plan?
Yeah, I mean, none of that is a sure thing, right? We don't know whether, you know, she'll be elected. We don't know whether she could actually build or set the stage for the construction of that many homes. But so I would say that that's a total sort of unknown. So I'm not sure how much is priced in, really.
Prashant, we thank you so very much for all of your time and reporting. Of course, a very highly watched stock today, one that used to count Warren Buffett, of course, as a larger shareholder. That is Bloomberg's Prashant Gopal. Now coming up, we've got Rithm Chairman and CEO and President Michael Nirenberg joining us next to break down the firm's latest earnings report and wider trends across the market. The company also recently reported earnings as well. We'll get a check on what's in his books. This is Bloomberg. This is Bloomberg Markets, and I'm Sonali Basak, and it's time now for the stock of the hour. We're looking at Rithm Capital. The stock is higher in the session after reporting an earnings beat this morning, with earnings of 54 cents per share versus estimates of 43. It also beat on interest income, and of course, an interesting time for managers like this in the face of higher interest rates. We're joined now with an exclusive interview with Rithm's chair, CEO, and president, Michael Nirenberg. And people have had their eye on Rithm, particularly because just about a year ago, almost a year ago, you closed a very heated acquisition, something that was a hard-won acquisition by you in Sculptor Capital, boosting your asset management arm, particularly in alternatives. How does this change what Rithm looks like ultimately?
Just to frame where we are today, and I'll get back to your question. When you look at the firm today, we manage approximately $80 billion in assets across Sculptor and Rithm and all our family of companies. The acquisition of Sculptor was a key one for us because really what we're trying to do is change the narrative of who we are as an asset manager and actually change the valuation of our equity. Honestly, it kind of hasn't really worked too well up to this point.
So what multiple would you like?
We want to trade something that's more of a multiple where asset managers trade versus where REIT trades. Our results are terrific. This morning we put up, as you pointed out, very good earnings and results. All of our business lines continue to perform extremely well, and we're on the mission. We're on the path to do this, and we're going to get there. We just need to change the narrative around our earnings multiples.
So if you want to be trading more like an alternative asset manager and you have Sculptor under your wing, what does Sculptor look like a year from now? How big can you make it?
So I think the one thing I said this morning on our earnings call, and I would say to investors and LPs and everybody that invests money with Sculptor, as well as with Rithm, is that we want to lead with results first. It's not as much as everybody's in an AUM game, and when you look at all the the larger alternative asset managers who talk about the amount of capital they raise in a quarter. The results have been terrific. So I think results are going to continue to lead to more AUM growth at Sculptor and at the Rithm platform as well. It'll be bigger. We're starting to see real inflows. The commercial real estate team is out with a large fundraise. They just closed $1.3 billion in a very, very tough environment around real estate. That'll likely, we'll probably have another close here before the end of the year. That fund will likely be oversubscribed. The returns overall for all of the different verticals that Sculptor has have been, really good. So leading with results, we'll see more AUM come to the platform.
So that's Sculptor. Now that you're a year into this acquisition, I feel like I can ask you now, what else are you looking for out there? How big is your propensity to do more M&A?
So it's big, actually. We want to grow our platform. As I pointed out earlier, $80 billion of so-called assets under management. I think we're underscaled right now in credit. That's the theme, right? Everybody keeps talking about private credit, direct lending. There's a lot of these things we've been doing for, I've been doing this forever, but as a group, we've been in the direct lending space. We've been in the structured credit, the unsecured credit space for many, many years. I think you're going to see, hopefully, more acquisitions by us to grow our credit business. While saying that, we want to be prudent and think about multiples that you'd have to pay for an asset manager.
Right. What does it look like out there? It seems like there are a lot of private credit acquisitions happening in the market right now. I could imagine that drives up the valuation right now.
Absolutely. So when you look at some of the acquisitions that were done by some of the larger alternative asset managers where their equity is trading at anywhere from 20 to 30 times, we don't trade there. So we have to be extremely mindful of, obviously, the acquisition price and where we trade overall in the public markets.
So I want to go back to something you were talking about just a minute ago, real estate. We have this incredible story right now on Bloomberg.com, the Bloomberg terminal, about AAA mortgages going bust in the commercial real estate sector. You haven't really seen this since the great financial crisis. It is pretty bloody out there still.
Yeah, I think that's one off. I do think there's certain office that's going to get really hit hard. You've seen sponsors giving back, office. We buy assets, obviously. We bought an office building last quarter in just outside of Virginia, last traded in 2019 at $91 million. We paid $27 million for it. Good tenants, 50% leased up, and we think that's going to be a really good investment for us and our shareholders.
Less than a third?
Less than a third.
So how much room do you have to buy at those prices? How big is that opportunity and how long does it last? Well,
I think you've heard some of the larger real estate players come back and start talking about whether we're bottoming out or not. I think every asset's different. You bring up, this, I think it was 1407 Broadway or something like that, where the AAA's got hit. Every asset's different. You have to underwrite the asset. You got to be really patient. We are starting to see more capital come back into the sector. Again, we'll be patient.
So what about the housing sector? Because you're watching this steady climb back higher in mortgage rates. What does that mean for how the system might work in the next 6 to 12 months?
Yeah. When you think about this, going back to the so-called COVID crisis, homeowners were taking out mortgages at 2.5%, 1.5% to 2.5%. Those folks have no incentive to go anywhere unless their family sizes are growing. So when you think about the housing market, it's a little bit stuck. You look at home prices, we're at kind of historic highs. The counter to that, I think, in a lot of ways, is the stock market's almost at historic highs. So people have made more money. Housing's still less affordable. You are seeing new home sales a little bit lower, and I think that'll continue the trend. We're in the middle of an election, obviously, and I do think both candidates there is going to be inflation, right? Because we need to continue to issue more debt because the deficit's going to continue to increase. So where we actually settle out in 10-year rate and how that correlates to the mortgage market, which is how mortgage rates get set, remains to be seen. So
you think that there's a lot more upside room here in mortgage rates as well?
Well, mortgage rates today, if you take 6 3/4 or 7%, something like that today, can mortgage rates go higher? The answer is yes.
So with all that said, that makes it very difficult to borrow to buy a home. You have one of the candidates, Kamala Harris, saying that she wants to build another 3 million in excess of the existing plans for supply, right? Can she do that?
Sounds like a good tagline. Where are you going to get the land from? Unless you're going to take federal land and you're going to build houses on federal land, and then how does that relate to the job centers and where people are going to work? I'm not sure how that actually works. And you have to think about the home builders today. If the home builders are out there and they have access to land, they're going to buy the land and they're going to build homes.
And to that end as well, you do have Trump coming out also saying that he wants to use federal lands. Can he succeed in doing that?
I think this is all campaign rhetoric, and if we have a divided government, which I think would be the best for the country, my sense is, we're going to be in the standstill for a long time.
So, big prediction ahead, best opportunity in the markets. You're looking at private credit, you're looking at the mortgage market, and even before that, before I forget to ask you, you might have some more transactional activity around the corner of your own. A lot of people want to know about NewRez and if it could list in public markets. So,
it's a big debate of ours. If you look at a couple of the peers out there, they're trading a little bit north of, 1.5 times so-called book. 1.25, 1.5 times book. Our equity trades a little bit below book. The one thing is what I pointed out on earnings call this morning. We have deployed $5.8 billion of capital since 2021 without raising equity. The reason we're able to do that is all of our subsidiaries sit in one bucket and all the cash flows into so-called one pot. It's likely, though, I think at some point we do explore, and we have explored, bringing this company public, and it's probably a 25 event.
We'll look forward to that. That is Rithm Capital Chairman, CEO, and President Michael Nirenberg on the heels of earnings. And some of the biggest executives right now are in Saudi Arabia for the Future Investment Initiatives Conference. Here's what some of them had to say about the U.S. election.
It is a race that Trump is favored to win, but it's almost a coin toss.
I think you'll see investment liberalization if there's a change in government.
My hope would be in either administration, there'll be a fresh look at how we can ensure regulation's important to keep guardrails in the economy and to keep our economy moving in an appropriate way.
I feel more optimistic about it with a Trump White House than a non-Trump White House, because the biggest impediment to progress that we're experiencing is regulatory is overregulation.
This is Bloomberg Markets, and I'm Shonali Basak. I'm going to bring you some breaking news here, of course. OpenAI building in-house chips with Broadcom and TSMC, according to Reuters. And you could see the shares of Broadcom spiking on the news. It's fascinating, of course, because you are watching a lot of interest, of course, in the AI story. Remember, you have a lot of earnings this week where a lot of CapEx will be really weighed on the heels of a lot of these earnings reports. But Broadcom in particular now up 3%. OpenAI seems to be a magic word for this company. But we're also going to bring you some more breaking news because in the AI world, there is more news, but this time about Elon Musk and XAI. It's in talks to raise funding at a value of $40 billion. This is according to a Wall Street Journal report. It was last valued at $24 billion a few months ago. It raised $6 billion in the spring. So, of course, a lot of capital needs for these companies and a lot of partnerships. But for now, I'm Shonali Basak. That does it for Bloomberg Markets. More markets ahead. This is Bloomberg.